Our talk today, in following up on the earlier podcasts on the theme of surviving retirement, is going to be a conversation with Dave Lester, who's a financial consultant or has been working in that field. So he's got a lot of experience to bring to the debate. But on the earlier podcast that we did, just to summarise why I went into so much detail about the general global events, I did that because it was setting the scene for what is actually going on, and because many people out there just don't have the time to check this out for themselves. So what we basically tried to do was to summarise key events that have happened since 2000. And as I'd mentioned in the earlier podcast, it would be boring me just talking to camera all the time. So we've got the dynamics today of a conversation with Dave here present to give us his comments and advice. The point being that the scene that we're setting, the global changes, we believe, not everybody out there is going to agree with this, but we believe very firmly that there has been a global reset that's already underway of a major magnitude. This has possibly never happened before, but the big examples there that Dave and I will be discussing as our conversation progresses. But the point I was trying to make there was that there are parameters that have been set now. The ground has shifted, the rules have shifted, markets are highly volatile up and down, and these are the stormy waters within which we have to function and navigate ourselves to be successful and look after ourselves as we come up to retirement, or we are actually already in retirement. So without further ado, me rattling on, I'm going to formally welcome Dave Lester today.
Good afternoon.
Who's going to be talking about his expertise on some of these key events as well, with perhaps a bit more detail, and some ideas of what have been going on behind the scenes with the banks, because he knows that market intimately. So Dave, over to you.
Yeah, we're not here, Andrew, obviously to give any financial advice.
Yes. Yeah.
But what we've seen and what we continue to see today is the banks filtering out customers that they simply obviously are not profiting from. And so this was kind of blown up in 2008 when the government bailed out most of the British banks and still own a large percentage of shares in British banks.
That's the high street banks.
The high street banks. Yeah. Now, we own, so if the government owns it, we own a percentage of that share in those high street banks. So we should have a say when they start closing, for instance, branches in local towns and cities on assumptions which are just not turning out to be true, saying that they're all quiet and no one visits them. But you'll see just by going down to any town how busy the local banks are. But yeah, so what we've seen since 2008, when the government bailed out the banks, very shortly after that, they started filtering out the customers they did not want to offer financial advice to. Mm-hmm. And they basically did this by saying initially, if you had potentially less than £125,000 to invest, you basically could not speak to an advisor at a bank.
Yeah.
So prior to that, going back to 2005, if you had £50,000, you could walk into your bank, ask to speak to a financial advisor. They would make an appointment. Yeah, in 2005, you could basically walk into any bank with any amount of money, ask to speak to a financial advisor, and you'd get an appointment within a couple of days, whether it was 20,000, 30,000, 100,000. Mm-hmm. Following the crash in 2008 and towards 2010, banks became very selective as to who they would want to actually speak to, and they've been filtering customers out ever since, to the point now where they are now closing down a lot of local branches, making it impossible for pensioners, anybody with a relative, they may seem as a significant sum to them, but it's not a significant sum to the individual bank. So they're making it very difficult to actually speak face to face with anybody.
Yeah.
Because if an old lady now, we speak about these now as pensioners, if a pensioner walks into a bank having had £50,000 to invest, they may hand her a leaflet, but the chances are they'll just say, go and speak to a financial advisor. So it's getting very difficult to speak to banks, and these are banks that you and me and the whole country own. Yeah, so basically it's getting very difficult now for anybody with what their bank deems a nominal amount of money. To the individual person, it may be their life savings, but to the bank, they're viewing every customer as how much can we get from this? How much can we get from? How much can we make from this customer? And if it's not, if they're not able, if you've got less than £125,000, you're probably more likely just to go into a deposit account. They don't see any annual returns that they can get from you if you're just taking an hour of a financial advisor's time just to end up putting £100,000 into a deposit account for which they'll earn very little.
Yeah. And as far as you're aware, is this hearsay, or you've had this confirmed as it's been in writing, internal memos, as far as you understand?
This is not here. This is not so much hearsay. I had a business bank once with NatWest, and I went to see the manager once, and he said to me, "We will no longer speak to you face to face because your account is now controlled by a computer." And I had a business account with them, and they said, "But because it's my private business, yeah." And they said to me, because I wasn't turning over less than, I think it's about £500,000 at the time, they said anybody who turns over less than £500,000, well, their accounts will now be dealt with by a computer, and you won't be able to come in and speak to a manager or a business manager about the account. Now that's just me with a business account. So if NatWest don't want to speak to me with a business account, I think this is not a conspiracy against banks. This is not me trying to bash the bankers.
Yeah.
I think anybody who's any experience with banking can go into their local town and they'll see empty spaces where there used to be a branch, where they used to go down and speak to a cashier, or get their pension out, or put their pension into their account, and it's a chance for an old lady an elderly people would much rather go and speak to somebody over the counter than be told that they have to go online, where they may not be that savvy with online accounts. They may feel quite nervous actually about. And then once you've got an online account, you're then going to get spam emails potentially, which is going to confuse elderly people who may reply to these spam emails thinking it's from their bank. And obviously that opens up an entirely different risk.
So you're talking about individual private investors there, people, not businesses.
The business account was mine.
That was
and
your
so it's
example,
basically my example of how the banks were saying I obviously wasn't profitable enough to be able to speak to a manager there, and so my account was being held by a computer. But that is now happening. Obviously, banks do not want to directly give anybody financial advice. And back then it was, unless you had like £125,000, they weren't interested.
How long ago was that?
I mean, that started in about 2010, 2012.
That was just after the financial collapse, 2008.
Correct,
yeah,
correct.
Yeah. They were tightening up on things. Yeah.
They also see it as high risk. If in 2010, following the collapse, I think they view it so much a bit more. If you've got a customer with say £80,000 and they advise you to put it in slightly higher risk funds like index trackers for the FTSE or even the Dow, then that falls in value. It opens them up to then obviously claims of mis-selling. So they're trying to reduce their risk as well.
Yeah.
Whereas they kind of probably assume rightly or wrongly that anybody who's got a higher value of money to invest will be more open to
the risk element. Yeah.
And understand the risk element a lot more. Not be open to it, but understand the consequences of such investments.
Yeah. Just interjecting there, just again, the narrative here, this is my narrative, and again, it's not financial advice, it's just a story of how I invested my money. And now we've got a financial consultant who worked in that field. I'll see if Dave can assess what I did, give everybody an opinion. So what I did, I went for low risk returns.
Yeah.
At my age, I can't afford to
No.
make any mistakes
That's
because I
right.
won't have time to recover from it.
That's right.
Which is fundamentally different to being if I was late 20s, early 30s.
Yeah.
So what I did, I transferred my money from the high street banks, mainly Barclays, into several smaller banks,
Yeah.
85k each time, because that 85k is guaranteed by the
protected.
FSCS.
Yeah.
So the mechanic for doing this was, I mentioned this in one of my podcasts before, but I'll tell you now because it's the first time we're discussing it and I want to see what you think. I only used the financial pages of the Daily Mail Online.
Okay.
I think it's called Money Online.
Yeah.
Gives a list of interest payments on 1 year savings bonds accounts, 18 months, 2 years, 3 years and more. I only exclusively used those banks named in those columns for the links
Yeah.
to take me to the actual bank. The reason being, there are other banks that have been created with very similar names, and this is done deliberately by the scammers. So that was safety net number one that I used. Only use the financial pages online at the Daily Mail Online. I think you mentioned something about...
You can use Martin Lewis has a very good web page which everyone's aware about on money saving. They also do delve into accounts, into top savings accounts. The only thing I would be wary about, the Daily Mail and the main newspapers who have these links are certainly going to, if you are on their page, that they will certainly be a safe link to where you're looking to get to.
Yeah.
However, scammers are very good at copying even pages from national newspapers, because you will often see adverts for Bitcoin, and the Bitcoin adverts tend to use high profile figures shaking hands with somebody in a national newspaper saying how I made 2 million, I'll explain to you how I made £2 million in Bitcoin in 30 days.
This is one aspect I wanted to focus on today. Later on, I want to go into that big time.
Yeah.
Because that is very interesting, because that even grabbed my interest, and I want your take on that. But just to finish off on this one here, just to summarise the story, because it was mentioned in the earlier podcast, so it was only using the guarantee of the Daily Mail financial pages to take me through the link. And then when I clicked on that bank, I went to that bank's page and I would check, as we discussed before, for the FSCS approved logo. FSCS approved logo, meaning if all goes wrong, the bank goes under and you've transferred to them £85,000, you are guaranteed to get your £85,000 back, as far as I understand it.
Providing the website you're on has not copied the logo.
Yeah.
So you can always check, you can just go straight to the FSA register and check the bank from there.
Yeah, just to elaborate on that point, confirm that you mentioned. Also, I would go to the FSCS webpage, checklist. I put the name of the bank in, exactly copied and pasted from the Daily Mail to put it in the search box of the FSCS page. And that then gives you an FRN number, which means this bank has been approved by the FSCS as a legitimate banking operation with apparently no serious problems, and we will therefore guarantee you up to £85,000 on one account. So if that bank is owned by, for example, several other banks, and you've got money with them, say 6 banks all in the same group, you don't get 6 times £85,000, you only get 1 times £85,000. So that has to be checked out. Again, this is not financial advice, this is just the story of what I did, and you would check it. Anybody out there going this route would check it out.
Certainly, but all the banks are now highly stress tested. So to make sure that when things go pear-shaped, they have capital put aside, substantial amounts, to cover deposits.
And just one other point there as well I'd like to mention here, which is when I first mentioned in the earlier podcast about my investments being 3.5
Yeah.
almost 2.7. Some were going up to 4.2. To let everybody know, now using the same system, I'm now reinvesting my money. It's ranging from 5.7% return to 6.01% return. And I'm so confident now about this that I'm not just sticking it away for 1 year, I'm putting it away for 2 years with each of the accounts.
Yes.
Because and this is where it'll be interesting to see what you think. I believe coming to the end of 2023, going early into 2024, the bank interest rates will start coming down, as briefed unofficially by the Conservatives to the Bank of England, because we're coming up to election year.
Yes, certainly.
And
You will see interest rates in 2024 start to come down. Now, you might say it's a coincidence that there's going to be an election in November, December 2024.
Yeah.
The big question is, obviously, at the moment, has the bank let the inflation cat out the bag? And can they get it back in? If they can't, then we may well see interest rates staying longer for much higher. For much longer.
That would be good news for me, but I'm monitoring it to see what the situation is. I don't think interest rates of 6% above will be sustainable throughout 2024 as we come up to the election, because that would lose the election for the Conservatives.